Good morning, Quasar Markets Live. I am here with the legend himself, BigBeat. You called this, I believe, 7 months ago now. Gold broke 3,000.
Yeah, and I think it would go higher. I mean, when you look to see that much cash on the sidelines, people do not like cash. They want that money to go to work, and in putting that money to work, they don't want it to not go anywhere. So sometimes to protect the hedges, they got to put it in somewhere. And guess what? They put it into gold, and I think we even broke beyond 3,000. Now I think actually even went higher than that.
Yeah, 3017 was that. Well, 3004 it says here on the CFD, but 3017 is what it hit there. And like you're saying, what I was surprised is recently we had seen a lot of talk is at 3,000, sell it, right? But you were saying, no, I'm not. And now I'm seeing more analysts jump into the same side of the boat that you were already on. Talks about the fact that, the U.S. economic concerns, the Federal Reserve policy, geopolitical uncertainty, military spendings, and then the big one that you talked about, central banks driving demand. You talked about this with Michael Litt, I think, 6 weeks ago, as a big one. De-dollarization, sanctions, and inflation fears have everyone buying gold, right? So are you still in the boat of go long? Not go long, but if you are long, hold longer.
Yeah, gold, yes, but more silver. I mean, silver is now $34 an ounce.
Well, yeah. Sure. You said it went back below, but it was there. It goes back at 34.
Yeah, again. $34 an ounce. People are getting nervous about $34 an ounce, right? So I'm still going to hold it. I have no desire to sell my silver. I mean, I'm sitting here with a pile of silver, right, that I just didn't even know what to do with. So, yeah, no, I think we're still go. I'm not concerned about it.
On silver, we do have a couple of key zones to keep in mind that you are going to see pressure at. You're going to see pressure in this 35 zone where we, capped out here in the middle of October. And then again, when you hit that 34.86, but that's expected resistance from past price discovery. So don't get nervous on those things. That's something to keep an eye on. Overall, markets are rallying pre-bell so far. We see QQQ up 1.28%, SPYs up right about 1% so far. Overnight, overseas, we saw a move up by all three of the major markets that I sort of take a look at. The stocks is up 78 basis points. China is where we saw a lot of the movement last night, and we're seeing that as we start to talk about U.S. stocks. We'll talk about some of them, but they're all moving up. And then the Nikkei up 1.69% so far. Steve, I got one for you. Is quantum computing back? Just a week ago, I thought it was dead.
The news of my death has been greatly exaggerated. That was an old Mark Twain saying, and I screamed it. I've been yelling about it. I just been saying, look, quantum computing is a lot like the internet back in the day. Yes, that old. That I was told the internet is dumb. It's a fad. I was told that cell phones, smartphones were a fad. I was told that, gosh, I don't even want to, maybe typewriters were a fad. Maybe the horse and buggy's a fad. Look, quantum computing is the next level. We absolutely have to have quantum computing in order for this to happen, right? There's no other way that we can have AI and the next level of all of this without quantum computing. We can't do it. And if you want to know just how serious the tech stocks are about it, Microsoft, Apple, they're all buying nuclear power plants in order to make this power to happen. So people saying that quantum computing is dead, or the metaverse is dead, or technology is dead, as everybody has a phone in their hands that's smarter than the space shuttle. No, we're still going higher with the quantum computing. Yes, I get it. There's been some serious silliness in the markets. There's been some tariff talk. Okay, that's going away. Okay, budget issues. Okay, that's going to go away. Okay, Elon Musk in the White House law on the Tesla, that's going to go away. Eventually, we're going to settle in, and we're going to be like, man, we should have bought with BigBeat on Monday when he called the bottom, right? And that's what we're at. I called that the other day. Amazon leaps. Look at that. I called NVIDIA. Nvidia is now 119 now, right? You could
Oh, slow down, buddy. I got
all
taglines for
right,
you
I
on
love
these.
it. I love it.
I'm
These
like,
are
you're
all
going too fast. You can't do them. Hey, I do want to go back though to the quantum computer, and the reason I'm I brought it up in a jokingly way, but it isn't a joke. Is D-Wave, which is QBTS, had their earnings reports and blew away expectations that anybody had. I do have some of the notes from it because I think it is important. They're up about 15%. They now said that they expect their 2025 revenue to exceed $10 million. They were only looking at 2.55. That's a big deal, as Steve can tell you, as someone who's doing a startup. When you can start to monetize and that money starts to move in incremental ways, it's a big deal. Their full year revenue beat, their full year EPS beat.
Yeah, you look at it from the perspective of when I look at ChatGPT or Perplexity or all of those things, right? They have to have the juice in order for it to happen. They got to have quantum computing. And when I'm asked questions Perplexity or ChatGPT or any of the AIs, it takes a little bit of time, right? Because they're number crunching in the back, right? They're having to ask those questions, going to make those charts, build those things. Quantum computing is going to change that, right? Quantum computing is going to make it almost as fast as a Google search now, right? We go to Google search. The problem with Google searches is that, unfortunately, we're not getting exactly what answer we want. We got to go find it. We got to go deep within the Google search to find the answer we actually want, right? And we end up with restaurant reviews and everything else when you're asking about park benches. It's crazy.
Yep.
So I want the next level of this, and we're not going to get to the next level until this happens. So, yeah.
Yeah. And they were up, like I said, 18%. And then what I noticed too is I started to look through the different spikers this morning. You see a lot of the others, Rigetti in here, a lot of those other AI quantum computer names up tremendously on that news. Also, Kingsoft Cloud, AppLovin, all those types of names are moving up in sympathy with it today. So that is great to see. Palantir, another big one. AI is, I guess, not dead either, right, Steve?
AI, it's AI, it's AI, it's AI. Look, I've been talking about artificial intelligence for a long time, right? And AI means a lot of things to a lot of people, a lot of different ways, right? I think one of the things that we have to concern is that people think AI is just as ChatGPT or Anthropic or Perplexity. AI is going to be the next level. It's going to be in your car. It's going to be in your robot that's mopping your floors. It's going to be in your everyday life, in your whatever your wearable ends up being. It won't be a smartphone by that point, right? And we're going to see a lot of differences, right? We're going to see the way that we actually interact in the world. And yes, a lot of jobs are going to go away because of it. But let's be honest. Some of those jobs will help you become a better person, be more efficient, as I have been saying. That's the key word that I always have is efficiency. So here we are, and I think we continue to go. I see nothing wrong here. I think we just go higher now that things are much better.
Yep, I do, and they're moving up nicely. Palantir with a nice move up, like I said, now at 82.64. So it is moving up a little bit. We've also seen DocuSign. We talked about earnings mattering in different companies.
83,500 now on Bitcoin here, Howard. We're looking at Nvidia now, still pushing higher, 119.07 here now, up 3.03%. And the VIX, which I have been calling for to get under 25, is now at 23.85. I'm still short. I'm going to continue to stay short. I think if it can get below that 23.53, we saw the low of the day yesterday. I think we go even lower. And I think once that happens, I think that we actually start to see a different level of the markets. We see a pump. We see a cover of the big sell-off from Monday, and I think we bounce back up into that gap. So I like that.
Yeah, absolutely. Nice move up. QQQ's tick, Steve, fairly flat so far, but advanced decline at 13.05. So looking sort of in that zone we saw yesterday where it could go either way at the open. As you said, Bitcoin recovering, pretty much all the commodities moving back up today. Where are you feeling with rates and stuff? Because I've noticed they're climbing back up 4.2 pretty quick here. 4.3 now on the 10-year, 30-year 4.637. So, they have been sort of steadily marching up here over the last 10 days or so.
Yeah, I mean, rates are going to sneak around this area right now because we are in the blackout period with the Fed. We need a little bit better understanding of what the Fed is thinking here. And if we do that, I think we will actually get a much better clip at understanding. Right now, I'm not thinking that the rates go up or down here. I think they kind of hold steady a little bit until we get a better picture. We saw the CPI print come out. That was a lot better than we expected. Inflation coming down a little bit.
Right.
That makes the Fed feel a little bit better. Labor statistics are coming out. Unemployment's coming higher. We saw DC getting hit. So these are going in the right direction, the Fed, but the Fed's saying we still need a little bit more time. We still need a little more data. I'm not sure what they need. This is a baseball bat upside the head. It's just getting a little bit ridiculous at this point. You need a lower rate so that I said this on Trade the Pool 2 days ago. The problem right now is that our biggest asset class is not the stock market. Our biggest asset class is not gold. It's housing, right? It's real estate.
Okay.
And real estate, and the president of the United States is a real estate guy. So he wants rates to come down. It all fits into the real estate narrative. And I think that's what we're going to have. Yeah, you can see right there.
So I have, for those that don't know, I have XLRE up, which is the Spider Select Fund that covers the S&P companies within the real estate sector. And as we can see, they've just gotten destroyed here, since the start of the month.
And it's going to get a little worse if we don't get these rates down. People are holding money back. You heard it from Michael Litt from the fame of The Big Short is already heading for the hills already. He went cash. Selling everything. That makes me nervous because he was right the last time in 2008. And
he not only talked about himself, he talked about a sovereign fund that had, I think the number was $150 billion in risk assets that they liquidated into cash and gold holdings.
That's right. I mean, he's the guy.
We will be replaying that interview this afternoon. Well, this morning, I should say, at 11:30. So that will be on again this morning at 11:30. I will say real estate, the Spider, I'm not a huge user of those Spider funds for those that are looking to do something, though, maybe in retirement accounts as it comes down to this 40 level here. You do see the historic support. So if Steve's right and rates are going to start to come down a little bit and move to that side, that would definitely be a spot to take a look at. Gold back at 29.92, so unable to hold that 3,000. It made the nice run up there. But it did come back down.
Yeah, I mean, there are some sellers at 3,000, right? We know that, and that's okay. Let them sell out at 3,000. We've had a good run. I would never fault anyone for taking a profit, as we all know. That's one of my rules. So, but I will say that let it kind of seep a little bit, and I think we run a little bit longer. You saw it about a month ago. Same thing, right? It fell and then right back up. It went and made new highs. Look. Sovereign wealth funds and countries are buying gold.
Right.
Heard it from Peter Thomas himself. Hey, I can't even keep it in stock, guys. Right. And you can, and by the way, you can buy gold and silver right on the platform through Quasar Markets, right? You just click on the
Absolutely. And you do have Peter on next Wednesday for an interview to discuss everything going on in the gold and metals. Last time he was on, he called this run to 3,000 perfectly. He also talked palladium that made that move that he talked about, and copper. Although I will say he did pop up the other day and say to you and I, keep an eye on copper. It's in a weird spot where he's not feeling really comfortable either way, not sure which way it will move. So I would say I do want to give that warning to everybody, because if the man himself is telling you that he wants to be, sort of out of the same way Michael Litt said he's out of a lot of his equities. If Peter Thomas tells me he's not in copper right now, then I don't want to be in copper right now. Right, Steve?
That's right. I will say that there's a couple of things that I'm really concerned about when you talked about copper. When here we're coming into the warm summer, spring time, and air conditioning is needed, and my air conditioner guy is coming out today, right? And because of that, if we see rates come down, new home sales will go back up, and that's what copper is used in copper wiring in your air conditioner. Copper wiring is used in your house. There's copper is used in a lot of places, right? So, for me, I want to be a little careful because copper could go right back up. Yeah.
Yep, absolutely. I got to keep an eye on it for sure. Hey, Steve, another one that I didn't have on my bingo card today was AAOI, Applied
Mm,
Optoelectronics.
yeah.
They've issued a stock warrant to Amazon to purchase up to 7.95 million shares at 23.70 a share. This was trading at $15.87 at the time. So again, a big play into the chip, move by Amazon. You liking this move by Amazon?
Very much so. They, when Amazon is smart, you want to talk about a company that's monopolizing things. This is it, right? I love AAO. I have for a long time. I don't like their stock has been slipping for a while, and Amazon's making a very smart move here by buying heavy into
Buying low, right?
right. I think what they're looking for is maybe the wireless side of things, where their Ring slash Alexa machines, possibly cell phones, possibly even bigger data centers behind them. And of course, they have optical cabling, meaning they can make fiber all in their warehouses to go faster and faster and faster, right? So, Alexa, stop. But that could be very much so. Look, that's a smart move, right? If you want to redo your house, if you can own the company, it's kind of nice, right? Your prices go down. So I think it's what Amazon is doing.
Yeah, absolutely. The other one I wanted to talk about, Steve, like we said, we sort of glossed over on Palantir here, but I wanted to talk a little bit more about something that we've seen Matthew Tuttle from Tuttle Capital, who has his Rebel podcast on this morning, with Jeremy Vreeland. He's been on the fact that Mark Andreessen had talked about the big improvements that we'll see in the healthcare industry from the use of AI. And they talked about today why Palantir is up is that they're teaming up with R1 to explore the use of AI when it comes to healthcare partnerships. And some of the key things I thought was important there was that the lab will leverage AI to automate billing, coding, and denials management, addressing inefficiencies in hospitals' revenue cycle operations. And they said that administrative costs represent 40% of U.S. hospitals' expenses, and that's an estimated 160 billion spent annually on revenue cycle management. So I can see why this is why someone from Andreessen Horowitz is saying that this could be the future to keep an eye on, the intersection of AI and healthcare, huh?
Yeah, Mark Andreessen, University of Illinois. Hey, there we go. Look, very
I know
simple.
somebody else that actually graduated from that school.
Me too. Look, I get it. He's right. A lot of the healthcare issues can be fixed with AI. Oh, okay. Not everything can be fixed with AI. Okay, here we go. I hear that all the time. This actually can be, right? These are actual data points. And I think you're going to see that if you're a person that works in coding for healthcare, your job is probably in jeopardy. It is in jeopardy. If you're a person that is handling intake of patients, yeah, your job is probably in jeopardy, because quite frankly, AI can be a lot more efficient, right? You have a broken arm, you go to this area, and the sign pops up, and go lay down there, right? Intake will be, what's your name? Stephen Orr, right? Okay, boom, I have all your information. I already know your insurance. See you later. Go to room C. When I went to the doctor the other day for the annual checkup, everything's good, by the way, for those of you who are asking. It took 7 people to check me in. Why? That's kind of silly, right? I don't even know why it took 20 minutes to check me in. Everything's
They have your information. Yeah, I'm with you. As someone who has to deal with it all the time.
Right. And I don't see that to be an issue anymore, right? And I think what you'll see is, I think hospitals, the layout will also change too, right? It'll be like stanchions up and walk here, talk to this, type in your name. You're already seeing it at McDonald's. Why
Right.
not do
Yeah.
the
How long
healthcare
till it
system?
gets to the healthcare where there's one person helping 10 people at a time instead of 10
Right.
people helping one? As you just said, think about the savings there. You know, again, it's been all about technology so far today, Steve. Rubric is another one that's up tremendously, 19.3% here. They had a narrower than expected fourth quarter loss when revenues surpassed expectations. Company also provided an optimistic fiscal 2026 outlook, and that's what's got it moving up in the positive direction here. You a fan of this one? I'm not that familiar with Rubric personally.
I don't. Rubric's good. They're a good company. I don't really know, and I'm not really deep in the weeds with them as much. But look, anything in this section is going to do very well. So we just talked about and I'm not. I don't know. I would just trade it. I don't know the volume's heavy enough for me here too as well.
Right. They are. They do trade on lower volume again. Another one up really nicely today is Semtech here. Semtech shares jumped 11%, now up about 14.55% after the chip company reported fourth quarter adjusted earnings beating analyst expectations of 32. Revenue rose 30%. So company expects fiscal first year revenue between 245 million to 255 million. Another one moving up really nicely in the early hours, and you can see this had been one that had been really beaten up over the last, and since the first of the year.
Yeah, I mean it's cloud, and Internet of Things. When your refrigerator talks to you and says, "Hey, you're out of milk," oh, don't worry about it. We just ordered milk. It should be here later this afternoon. We've gone from 5 years ago going, "Oh, I can see inside my refrigerator because there's a picture, of the inside." So I can see it in my phone now. To don't even worry about anything. We're gonna just have it shipped to you.
Yeah, we're gonna order your stuff. You got to pick up it. Go to Target. You got to pick up.
I mean, it just even delivers to you, and the
Right.
robot
Well,
walks
yeah,
in
you
your
can
house
go
and
that
puts it
far.
away in the refrigerator, right? Yes, this is very futuristic. Not really. The speed of this thing is happening so fast now that this is what I like about it, right? That we're just really, it's next level stuff, right? And oh, that's so far away. No, it's not. I mean, think about it. 3 years ago, we didn't even know most people didn't even know what AI really meant. Nobody really understood just how fast, efficient the market's going to be, right? And think about 2 years ago, we didn't have zero DTEs. The markets have changed. So this is really how fast the world is changing. When finance and fintech change this fast, the rest of the world's really changing fast,
Oh
right?
yeah, I mean we're about to go 24/5, right? So
Yeah.
on trading. So Simtech definitely up. On the opposite side of that a little bit, it is an intersection between sort of health, fitness, and technology. Peloton up 7.91%. Most of that's been based on a couple of analyst upgrades here. The big one being Canaccord, who upgraded them to a buy from a hold and 110 or $10 price target. I thought it said $110. I almost had a heart attack. I was running to buy this stock at $6 when I thought it had analysts saying 110, but at $10, still a nice move there. So Peloton up now 8.24%. So continuing to move to the upside. Big movers. We're going to keep on, Steve, here. That there's a lot of them moving today. Did Warren maybe miss one here or just miss his timing, I guess, would be really what happened, right? We know that Berkshire Hathaway had taken a big position in Alter towards the end of last year, and it moved up on that initial move, but then it really just tanked, and they
I
announced on
don't
their
think
last
Warren
earnings
Buffett
they got
cares.
out.
I don't think Warren cares.
Yeah.
He's not. This is beyond what he understands. Health. When you're looking at beauty products in your hair, I don't think he understands this world, and I don't think he likes it too much. So I don't really care that he's not in it or out of it. I look, and I don't even go to Ulta Beauty. I'm not that, even I don't even think my wife even goes. So I don't really understand this company as well. I will say that I like the layout when I go into the place. It's easier to find stuff. But why would I go there when I go to Amazon? Why would I go there when? Okay, so I
Well,
need to buy.
remember also though, Alta's partnered with Kohl's now, and there's an Alta in every Kohl's, making it much easier in Middle America to get
But
to it
still,
quickly.
it's a brick and mortar, right? And
Yeah.
people do like some people still like brick and mortar, but young people don't care. They just want to order their products and ship it back. Yeah. If I mean, I to me, honestly, it's if you're looking at this perspective and you want to know whether it's brick and mortar or it's Amazon, just look at FedEx, look at the shippers, right? Look at UPS. They'll tell you the exact answer of whether or not people are going to brick and mortar or not. If they're not going to brick and mortar, then they're getting things shipped, and FedEx is that company, right? And you can see
So
that
the answer is no, they're not getting it from FedEx.
well, I think one of the things is we're seeing is because everybody's nervous is that the consumer is pulling back their money. And then we've talked about this for a while. But I like this. I like FedEx right here. I mean, FedEx is putting in a nice little bottom here. You haven't seen this kind of pricing since December and possibly even last year. So yeah, I get it. Amazon has their own shippers now, but man, this is there's some big gappers in here that FedEx could really and FedEx isn't going away. I got 2 packages coming today, right? So I don't think this is even any closer than just one. Well, I mean, let's be honest. Without FedEx, the world doesn't even move. So,
Yep. We are about 5 minutes from the open here. Tick fairly neutral. Advanced decline has inched up to 2,000 here. QQQ has stayed pretty much at that 474 level, right around there right now. So in a pretty good spot here so far, up 1.2%. SPY looking to open up about 92 basis points at about 556.50 here. So we are seeing a nice little bump to the upside here in the pre-market here. Hopefully we get less tweets today out of the White House and we can see this move in the right direction throughout the rest of the day, right?
yeah, you see where Federal Aviation, the FAA, now has issued permanent restrictions on helicopter traffic around DCA after the fatal collision. To me, it's always National Airport. It'll never be Reagan Airport. But okay, it's like the FAA is still here. They haven't fallen apart yet. So I kind of like this. I like they're taking preemptive measures here, and we don't want to see that ever happen again. So that's good. Yeah.
I will say threat of tariff talks has a lot of the Chinese names moving up today. Baba up 2.21%, Baidu up 1.72%, JD up 4.52%, NEO up 2.75%. The only outlier, like I said, Li Auto, which had its earnings and had a strong Q4 earnings, but issued a weaker than expected Q1 moves there, and it has them moving to the downside here about 7 or 8%. Now only 3.59, so coming back. It was down as much as 7% earlier this morning, but trading at 27.69 here. So Chinese names catching a little bit of love as a general sector here today. And as we look at the Spider Selects, we do see that 10 out of the 11 right now expected to open on the green. Consumer staples, the only one opening pretty much flat right now, down about 4 basis points. The largest winner is technology. As we talked about, we've seen a lot of, whether it be the quantum computing names, the chips names, and especially the software names moving up this morning.
We're seeing where Wells Fargo now lowering the price on Tesla to 130, citing
I have a headline on that right there for you.
Weak headline. Oh wow, that's really not good. They're saying weak fundamentals. Wow, and sales were citing weak European sales. We know that Europe hates Musk, so yeah, okay. Wow, that's a real difference there in price.
Yeah, without a doubt. And what Steve's talking about here, Tesla currently trading at $247, and doesn't seem like the market cares about what Wells Fargo thinks so far.
Well, Dan Rise is called $200, right? So I mean, this is a real. That's a
huge move. Yeah, that's an indication that they don't have any faith basically in the company. You're looking for another 50% to the downside.
How about this one for you, Howard? I'm going to ask a crypto question. How about the SEC talking about Ripple documenting it on their website as a strategic asset for the
United States? Yeah, I'd actually say to you something differently. There is, why is the price only $249?
If that's the case, the price of Ripple should be $500. Right?
Yeah, $230. It's actually gone down from when I had looked at it. Right. It was $249. I want to say when I saw that news yesterday. Sure, yeah. And it could be that I'm looking at a different exchange than I was on. That their price moves, but yeah, I mean, I do think it is a big move. What it's more important about it is you should start to feel very comfortable that at least over the next 4 years, we are not going to see a CBDC or any work on a
No,
CBDC.
no.
And that's
They're
more
dead.
the key part. If they're not even working on it, even under Biden and the administration Trump won, they were exploring the use of CBDCs by the by different think tanks and different parts of the government. They're not even going to be doing that anymore.
Yeah,
So
if
it
you
is
want to talk
moving up
about
here a little
AI
bit
and all
today.
that, Ripple, if you're talking about whether AI is dead and quantum, well, I will say this much. Ripple's alive and CBDC is dead. I think CBDC, the talk is.
Yeah, the talk of that in the U.S. for sure. That sort of put a nail
All
in
right,
that
we're
coffin.
we're open here, Howard. Here we go, 83.4
Yep.
now,
Ticks to
and
the upside for the first click, now negative 78. So it is actually going negative here to start. Advanced
I think
decline though,
profit
4,087, Steve. So a good start. Let's see if we can hold it up. I will say Nvidia's first move to the downside here. I'm going to put on the cues.
silly profit taking. I think nervousness in the market is still a common theme right now.
So
I would not be short the market right now. There's just too much going on, and if you're short now, you missed the run because it's already done. We're going higher. There it is, 119 Nvidia again. So look, I mean, I just would not be short this market.
yep, I can't argue really
83,
there. And first moves
6
were
now on Bitcoin, so we're going higher. Yeah.
Yeah, first moves to the north side of the VWAP here in the short-term chart on Qs. So that usually gives us a good indication of forward momentum here starting off the day. SPY has dropped down about 10 basis points. It was up 96 basis points, now only up 87. But again, trying to break through the lower time frame VWAP here would show a little bit more momentum to it.
I'm advanced declines up 4,000. I mean, I would not be shorting anything in this market right now.
It is moving down though, and tick's still moving down slightly. So again, this first half hour could be a little bit of profit taking across the board. Will not surprise me. Bitcoin up at 83,600 right now. Let's take a look at the early morning movers, see how they're doing here. AAIO up 40%. That sounds great, but keep in mind it was up over 50%. So actually about a 10% retracement from its highs of the morning. What is still moving up, though, is Rubric up at 20.41%, now 21%. So this is one that's continuing its forward momentum from this morning. SMTC sort of in the middle of its trading zone right here. See if it can make it. It's actually looking pretty nice on that hourly chart here. So SMTC holding up pretty well so far. And actually
Nvidia at the highs of the day, near the highs of the day now. I mean, that's what I'm saying. I would
Mag
not.
7 all positive here right now so far. The leader is Tesla, 3.6% to the upside, trying to break above that 250. That was sort of the line in the sand yesterday. I was watching 250 was the tough zone. It got above it for about a second and was unable to stay above 250. So today it is moving to the upside, continuing to move 249.06, 249.01. Nvidia, same thing. Can we break above 120 here today is going to be the question. 119.84, trying to make a run back into the liquidity zone at 123. We'll point out, if you've been watching us here, I've been very clearly pointing out these liquidity zones here. I was a buyer of Nvidia within that zone in between. It didn't get down to the 101. It got down all the way to the 105, but in that 105, 109 range, now at 119 and making a move up, I would be a seller personally towards that 200-day MA here on any move towards 127. So
Yeah,
looking nice so
we're
far.
going there. I think we're almost at 120 now. On
Yeah,
Nvidia.
we got a runaway here so far this morning. So we got some short coverings happening on 0 DTEs. It looks like some people that thought the market might turn in their favor if they were bearish. It is not doing that so far, and we're seeing moves to the upside so far play out. But again, like I said, you want to see these key areas you want to watch as it enters it. Nice to see Netflix back above 900 to Meta above 600. So we're breaking some of those psychological number hurdles that we had been stuck at here, Steve. So looking positive for me just from a price action standpoint, I don't even have to pull up these charts to see that, a break above 120 is going to be bullish for Nvidia. Google needs to hold 165. Amazon, the 200 mark, where it's still a little bit below, is the key spot to watch. Meta staying over 600, Tesla 250, and Netflix at 900. I don't need a chart. I can look at those numbers and know that those are going to be key zones today to keep an eye on.
You asked me yesterday what my final thought was in the morning show, and I said this: I ain't scared. And here we are, right? The answer's
Yep.
pretty clear here on Friday, and with the run like this, it's what tells me is that it was the shorts just trying to push over the week, and they got it wrong. They were chasing on Monday, did okay on Monday, but now they're giving all those gains back, and they don't know what to do. They're lost, right?
Yep.
And I wasn't lost on Monday. I banged the table for the first time in 2 years, and I said the bottom's in, and here we are. We're already pushing back up. The escalator up, elevator down. I get all that. I'm still a little bit nervous when it comes to a tweet from the Trump White House, but other than that, I don't really care. I think we're showing what the market's doing. That's resilient. Yes, there are some cracks in the armor, but it's not as bad as everybody thinks it is. So I'm not too concerned.
Yep. None of the fundamentals change. The talks of tariffs will get worked out on their own,
Wow. Trump said he had a very good and productive discussions with President Vladimir Putin in Russia yesterday. Wow. Okay. That's a really good news piece there.
Yeah, that news has advanced decline spike.
And kaboom, there's the market as that news hit. Yeah, if you're listening in.
So, the same way that he can talk a market down, he can definitely talk it up. So,
wow, he says on Truth Social that there's a good chance the Ukraine war can come to an end. Wow, that is big news here.
Yeah, Q's just popped up 1.72% here, 476. So that 475
and
level.
Said that all we need is a little bit of good news, and this market's wound up to go. And in the very second the good news hits, boom, the market jumps. So look at that. We listen in here in the markets. We know what we're doing.
I'm just switching over here to the screen and to the pumpers here, see what's moving the most this morning for us. We'll start off in the
NVIDIA 120 now. It's about to hit right here, 119.93, 88, 85. I'm not too concerned, but this I like this move. 119.90 again, 94, 95. The high is at 96. Should hit 120. There may be some resistance at 120, but
like I said, that 120 is definitely the line in the sand
right.
to keep an eye on. So big winners so far this morning: Micron Technology, MU up 8.3%. MicroStrategy, one of our favorites, up 6.89%. Palantir up 6.43, and then you drop down to Ultra Booty at 5.6. Crown Castle, which is a real estate play. Excuse me, it is a REIT. And then AppLovin up 5%. Those are the ones up more than 5%. Laggards so far in the NASDAQ 100 and the S&P. Abbott Laboratories down 2.8%. Dollar General, which we didn't know, so we saw the big move to the upside yesterday, down 2.7%. T-Mobile and Verizon both down again today. So that's the second day in a row that we're seeing the communications side get hit. Coca-Cola down about 1.47 and Dollar Tree about 1.42. So again, we're seeing more pumpers than we are seeing laggards here. Love to see that at the start of the day here. Tick staying positive about 340. Advanced decline now 42.31. I think if we can break above that 4,500 on the advanced decline, it really starts to move us up in an accelerated way. Steve, your VIX, while it gave you some heartache yesterday, back down to 23.37 here this morning. I know you're holding those for next week. So we are seeing it cross below that. You've mentioned that you want to see it break below that 23. That's where the gates could break to the downside here. So we'll see if that does the trick. But the good news, volatility a little bit more to the downside here. And as Bubba said, our boy Todd Horwich yesterday, what the market needs is bilateral movement, not just one way sort of volatility like we've seen. So this is good. I'm sure Bubba is happy today.
Yeah, I mean, we've everything we said all the week is now coming to fruition. So 120.20 now. We hit 120.40 on NVIDIA. Look, to me, it's one of my rules, right? The thesis doesn't change, then why are you getting out of your position, right? You made a decision to buy, you made a decision to do something, then here you are. And these theses are paying out and playing out. And I'm not going to change my thesis now. I will tell you that 23.45 now on the VIX. Yesterday, I felt like I might have been getting a little greedy on that VIX, but I'm going to take that greed all the way to the bank today, I think. So,
yeah. I can't argue with that. As I go
U.S. envoy Witkoff now said he had a long meeting with Putin last night in Moscow. It looks like things are getting done here now. It looks like I think Putin is probably tired of the fighting now, and as long as he gets what he wants, I think he's going to be okay with it.
Yep, and again, markets moving up in that news. Tick still positive, getting closer to neutral. But
Peter Schiff just says gold is the apex predator that will eat Bitcoin.
Yeah, he's good at saying that every time it makes an increase and Bitcoin moves down. So I'm good with that over the.
But
he said
it right at Michael Saylor.
Oh, they both, yeah, they both go. Well, that listen, Peter Schiff doesn't even work. All he does is try to farm for engagement. And Saylor's become the biggest, Bitcoin maxi out there. So these two will let them fight it out, have fun. It is fun to watch those two fight, but I can give you my 80 things that make Peter Schiff look stupid.
I'll tell you one thing I really do like in the markets, and that's lumber prices coming down. Lumber prices now pulling off that 2.5-year high. I was really concerned about lumber getting to the point where even if you looked to buy a house or build a house, you're going to have some trouble because lumber prices were getting outrageous. But with the tariffs coming on, Canada was an issue because we get a lot of
all of it there.
Yeah, pretty much, yeah. And now I think they can back off a little bit. And I'll tell you the other one that we were watching pretty close was orange juice, right? The breakfast trade.
Yep.
So
I just sticking in your trade for lumber. The place I tend to look at here could be an opportunity here at the Home Depot, right? That's always one that gets some good ones here. Home Depot, Lowe's, and we know that's been beaten up here a little bit. I do think that's a cyclical business when it comes to Home Depot. And I don't mean that it's seasonal. I mean that what happens is we see there's a lot of times where people go into, extended periods of rebuilding their houses or building additions and doing things to improve their houses. And I think we're entering one of those. People have been holding back and they want to now do that. So we'll be interested to see. And then you said orange juice. Give me one second.
Good old breakfast trade. Piggies, bacon, and OJ and ham and all kinds of stuff, right? Milk trade, they're all coming back down. So OJ has really gotten beaten up. The price went up because of the hurricane destroying the crops in Florida.
Right.
Companies like Tropicana were in trouble, things of that nature. Those big companies that just do nothing but orange juice. But that's kind of slowing down a bit, and OJ prices are coming back as trees are getting planted at a very fast clip. So people aren't going to stop drinking orange juice. In fact, you probably pretty much have to go back to last year in the summer to where OJ was. So
May 23 I got up OJ which is the futures right now at 257.90, and you can see the last time it was at that area was July of 2023. And it's taken, like you said, a stairway or escalator up, and that is definitely an elevator to the downside. Hopefully it gives us some, a little bit of leeway here, or a little bit of breathing room for, inflation, right? This would help with that.
Yeah, we're seeing a drop here now in Bitcoin from 83.6 to 83 in like seconds here. I'm not really sure what happened there. Some profit taken again. It's starting to get a little silly.
Yeah, that kind of little intraday move like that was liquidations. That's perpetual futures. Remember, today is going to be the same way that it is for the end of weeklies. There's end of weeklies on CME is the last sort of thing to crumble. So you'll have short covering and movement across the board there. Steve, one thing that you brought up, I wanted to bring up a little bit with you. I had on, as I mentioned, Todd yesterday, and Bubba was talking about, for him, zero TTEs, he was really talking about how the retail is playing it wrong.
They are. I've said this a million times. But for those of you who don't know Bubba, I tell everybody, give him a follow. He's an awesome guy.
BubbaTrading.com but
he's also a professional gambler. He lives in Vegas, right? So Zero DTEs are right up his alley, and I like that for him. Right? This is not, and he's right. Right? Zero DTEs are not for the faint of heart. I get it. There are people trading zero DTEs.
Well, and what he was saying is that they're doing it wrong. You don't buy a naked put or a naked call on a zero DTE. That you're still using advanced. He's using covered calls. He's using
Right.
callers. He's using,
He's the
straddles.
money taker. He's the one taking the retail's money.
Ding,
because
ding, ding. That's what you just said. He can still be a market maker in that situation as a retail trader, and that's what you want to look at. So those are the educators we're bringing to you. That's what we want to explain
sell
to
a call,
people.
right? He's got the share.
Yeah, as we talked about here, the problem earlier this week, right? 58% of the calls and puts that were the option plays on the SPY on Monday were zero DTE, and the majority of those were getting killed because they're naked. What you want to do is you want to come to Quasar Markets. You want to find the educators here, and you want to follow them. People like BigBeat, people like Todd Horowitz, like Mark Petrino, we have coming on at 10:30 this morning, every Friday at 10:30.
I like Mark. Mark's a good guy,
yeah. A guy that used to trade professionally for Stephen Cohen. You might know him. He owns the Mets. A42.
Cohen owns a lot of New York, too.
Yeah, A42. Yeah, they're not a small little player in the market, Stephen Flanagan, he ran
Hamas is now saying it's agreed to release Israeli American hostage Aiden Alexander. He's the last living U.S. citizen there. So that's good, coming out of CNBC right now.
Yeah. So those are the people. That's what we want to do here. We're trying to level the playing field for you. And that's what we bring on these educators. We have Stephen Flanagan today at 10 o'clock, like I said. Coming in, he is a 30-year veteran in the forex world, ran the electronic trading programs over at JP Morgan. So you want to listen to this guy. 10:30, like I said, charted market technician. Mark Petrino did so much work for so many hedge funds in the past. Then we have Michael Litt with BigBeat here on. Michael is a global strategic advisor to sovereign wealth funds. And we're talking about some of the largest ones that come out of the Middle East. He gives you the information going on there. We have him on at 11:30. And then we've got Jeremy Vreeland and Matthew Tuttle. I spoke a little bit about them. Tuttle Capital with about $4 billion under management now in their ETFs. He's going to be on with their Rebel podcast. So that's a Friday alone here at Quasar Markets, everybody. Wait till you see the schedule next week. We've got over 20 guests already lined up for next week's shows. So we are so excited about what Steve's building here, and I can't wait to be part of it.
Yeah, I mean, but the speed of, we call it the speed of Steve around here, right? How fast can we get things done?
And Steve, I will point out Bitcoin right at the back of that 83,430. Like I said, that was just liquidations in the perp market, moving the needles up and down a little bit.
Looking at an interesting stock, and I think one that people, this is a bouncy one. Look at Walmart, WMT. Interesting there that they're being hit with these tariffs, and they're really facing Chinese pressure here. And it bounced this morning, but it might be getting close to a buy here. I mean, not talking about whether buy or sell, but
just things that are on our radar. This would be one that's on Steve's radar.
Yeah,
I see it here on the weekly chart. You can see we're right at the spot that it broke out from in November 11th. I'm going to move this from a weekly to a daily here because that's the chart I tend to use the most for these. And you can see, what I love, Steve, that 200-day MA. Again, I know
we're getting
on everything right now, but this is when it gets close. Something like Walmart, when's the last time it was close? Back in December of 23. If you bought in December of 23, you got in at 50. So again, we don't tell you what to buy and sell here. What we do is show you what's happened in the past. If you bought in the past, Walmart, the last time it got down at this close to the 200-day MA, that was December 11th of 2023, and it was trading at $52. I think you would be pretty happy with that performance since it, right?
Wall Street Journal now says that Tesla is developing a lower cost Model Y SUV that would debut in China. That's interesting.
Well, it's funny. We've been hearing a lot of communication between the Tesla organization, not Musk himself necessarily, but with the premier and the government in China, because they've been pushing Tesla a little bit. It's got me a little bit something that I just kind of keep in my spider sense tingling there. I want to keep an eye on personally. It's just a weird one for me. Steve, I'll
23,
tell you, the
26
latest
on the
industry to
VIX.
go after Trump and plead for these tariffs to stop. I saw this morning a good friend of mine from DC, Chris, was on from the Wholesalers of America for the liquor industries.
Yeah.
And he was on talking about how bad this is for companies like Brown-Forman, Constellation Brands, just everybody, how intertwined these companies are. St. Patrick's Day is coming, and everybody's Irish whiskey just went through the roof, right?
Not yet. What's interesting is they haven't done it yet. No paper has been put to anything. So the scare is in the markets, but not the actual production of are we going to start slowing down the whiskey production in Ireland? I don't think so. They didn't quite a bit over
No,
there.
the talk is what people don't realize too is what's happened over the last 10 years or so is while there's been so much consolidation over the last 30 years within the liquor and wine industry as these public companies like Diageo, Brown-Forman, and others gobbled up. But at the same time, what there has been is there's been a lot of merger and acquisition. So you've had a lot of mom and pop companies come in that are there. So now there used to be 4 distilleries when I was in the liquor business 10 years ago in Ireland. There's now over 40.
Right.
When you look at the bourbon industry, again, there was maybe 10 major players. There's now, over 400 to 500 local mom and pop producers of bourbon and whiskey throughout the U.S. in places like Colorado and Utah and Vermont. They make great ryes and things like that. So hopefully we'll start to see, like you said, it's just rhetoric and we see more of a move to the upside.
All right, keeping our eyes.
Your boy Ron does say that new slower Tesla, though, is the pedal to charge model. Ron's always here to throw in a sense of humor.
Is that the one that's not on the White House lawn? 120.30 now on.
So, man, 500, Steve, and we're about to break that 5,000 level. In my personal opinion, on the advanced decline, we're 480. 4,866.
And NVIDIA just hit the high of the day. So there you go.
Yeah, NVIDIA now, now you're just watching. If it stays above 120, you're continuing to be bullish there, like we talked about. Same thing, Google, we were looking at that 165 area. I don't have to bring up these charts. It's bullish over that 165.
Howard, if we get the VIX under 23 here, I will be taking those puts off.
I understand that fully. Amazon still got to break that 200. So Amazon wasn't one of the ones that unable to break above key resistance, in my opinion here. Meta did, though, 602, and Netflix running above that 900. It's definitely a mover here, up 3% now today, 2.64, but in the pre-market it had been down, so that's a nice move up you can see here by Netflix. Meta, same thing. Tesla, 245, so now you got to start targeting that 250 area now that it broke 245. Does it get above and hold above 250 is the key area there.
Bitcoin 83.7 here. We might break the highs of the day here.
And tick still positive 374. Like I said, advanced decline pushing up towards that 5,000 level here very quickly. VIX falling down 23.21 here. You heard BigBeat, who's in it. He's looking forward to any break below 23 here to probably take some profits on his position. QQQ up 1.8% right now. SPY up 1.35. Dow Jones up 91 basis points, and the White House is tweeting pro-business today, so has the markets moving the way we love to see it here. Whew, that was a lot to get out there, Stevie. Can you take it for a second?
Look, all of the theses we've been talking about since Monday are all playing out today, and what a day to be alive, right? I think that you got two things going on here. You got Ukraine is being settled. The budget, more than two things now. Budget's being settled out, probably going to be fixed. You're seeing is Israel and Hamas maybe getting closer. There's a lot of cool things that are happening today, and this could be the day that just the markets really explode to the upside. And really, I mean, you're already seeing the Dow up almost 400, and you're seeing the Nasdaq up 300. So for me, everything we and I said I just want to see one good thing, and now we're seeing 3 and 4 good things. So, look, I didn't get nervous on Monday when we're hearing reports now that DeepSeek is now forbidding some employees from traveling abroad freely. Wow, that's interesting.
I'm going to go a different route on you here, Steve. We got a little bit of a pumper, although in the last couple of seconds it has pulled back a little bit. PD, pager duty, up about 12% here this morning. 1748. They did announce a big buyback of about $150 million of a stock buyback program. And they also announced a path to boost their annual recurring revenue. So good move up here by PagerDuty. It is funny because once you still keep the name Pager on a company, and that's what they were back in the older days, it kind of just makes you laugh when you say it, right?
Well, you know what? I think
but they've pivoted. I want to make that very clear that they've pivoted.
If Elon Musk didn't have PagerDuty on his belt, it would be a different situation, right? Because that's the thing. It gives you access to all the services that you want, right? If you're building software, you want PagerDuty, right? Because you're getting hit by all of them, figuring out what's messing up or what's going on. So I like that.
Nice move up here also by, as I said,
Bitcoin
up about 4.36% here this morning too. So we are seeing some high flyers moving this morning. Tick still up 321. Advanced decline 5,039. Like I said, it was going to crush that 5,000 level.
Let's get it 83.8 now, 83.9 now on Bitcoin. So let's go. Let's get back to
holding that 120, trying to just broke back below that 120 here. So that is the battle in the sand right now, right around 120 on Nvidia, up 3.8%. All the Mag 7, they're leading the way. I guess they can't call them what it was Kramer calling them the other day, the So 8 or something. Now he had a new name for it. So
I at this point I don't even listen to him.
He talked it back into existence. Mag 7 definitely pulling us up here. As I look at the Spider Selects too, what's great to see is all 11 sectors to the upside here. So this is a broad market push to the upside. If we look steel, everything in the top steel is up. Healthcare is the one that's got a little bit more of a mixed bag. It always seems to. We see that Merck's down about 20 basis points here. Cardinal Health down about 24 basis points. And Centene down about 38 basis points. Restaurants mostly up here today. QSR down a little bit. Wendy's down a little bit, but most of the restaurants are moving to the upside here today. Next is going to be crypto stocks. They are all high flying today. We see BTBT, which is Bit Digital, a Bitcoin mining company, up the most, 12.33%. But MSTR leading the way up almost 6%. Looking at the chip sector again, every one of the major market cap chips is up right now, being led by Micron, up 6.64% here so far today. They are the first of the chips to go back onto earnings. They have their earnings here March 20th. So I will keep that in mind exactly 6 days from today.
And we're about 3 minutes away now from University of Michigan consumer sentiment numbers, and expectations are for 64.3, a little bit less than the 67.3 that we were seeing. We definitely want to see everything above 50, obviously, but this is slipping down. Consumer confidence is slipping a bit, and we know that if that's the case, they'll start pulling back. Obviously spending money. Then we could push right into a recession if things don't really start to heal up a bit here. And I really am interested. I don't normally say, ooh, the consumer sentiment numbers is what I need to see today. I don't normally see that, but I this time around I think I do, because it needs to tell me what my suspicions are.
Right. Absolutely. I will point out, Steve, another one of you were listening to us. I jumped on JP Morgan yesterday, right, about how it was in that liquidity zone that I loved, how it was undervalued on its PE. Nice little jump up here, 2.32% so far today. Hit a high of 231.57, pulling back a little bit. But these liquidity zones don't normally lie. When you take a sweep into it and move directly out, tended to be an explosive move to the upside. And we are seeing JP Morgan move nicely to the upside. Same thing, Bank of America moving to the upside. Wells Fargo, all of the banks again moving to the upside. Tick up still 138 here. Advanced decline sort of maxed out.
I think you're just worried about consumer sentiment numbers right now, and I think people are taking the profit off before 10 o'clock.
Yeah, right now I would be exactly like you said. It is going to, we'll see. VIX is sort of narrowed down in that 23.35 area here also. It's going to be what comes here right at that 10 o'clock hour. We'll see.
Yeah, I mean, anybody who played zero DTEs the last week's probably been burnt, is a really unhappy camper this week. And all they had to do for us was just pretty much just listen to us.
Well, and what I hope is that they were smart too. Like in other words, you won either way this way on the zero DTEs, right? If you've been listening to us and you were long zero DTEs, and you listen to Steve, who was saying, "Do not worry, this week is going to play out." It played out. If you were short, we said take profits, right? We said on all these things that you do, you want it to be quicker
Yeah.
to take profits. So if you did that, you won both ways. Only the pigs are getting slaughtered here. People
That's right.
staying in too long into their positions. So, be a bear, be a bull. We love them both. Don't be a pig because they always get slaughtered. You can't stay in this
Although I
volatility.
will say I'm being a little bit of a pig on my VIX puts here.
Yeah, no, but again, if consumer sentiment comes in here right where we expect, so to speak, on at 10 o'clock, we'll do it. I do see our man Stephen Flanagan is joining us. Let's get him in the room. Let's see what's going on today in the world of finance and the world of forex. Mr. Flanagan, how are you doing today?
I'm doing good, guys. How are we doing today? You guys are
Doing
hot.
well, man. It's a little bit more fun when things are moving up and the president's tweeting about positive movement in things, not negative, right? Makes everything a little happier.
That's right. Yep, I love it. And as Steve said, just a couple of little sprinkle of new ingredients to the market here can really make a totally different day. Yeah. I kind of like the upside. I'm looking at the charts, which we'll get into in FX, and definitely starting to see a basing pattern here for the dollar index.
University of Michigan consumer sentiment now coming in at 57.9, way less than the 63 that was expected.
Okay, let's keep an eye on the tick here, guys. Quickly, I'm going to bring up the chart just so we're watching this tick here pretty quickly. Let's see. VIX spiked up here, 23.75. So we do see VIX spiking up. Tick went negative right off the bat. 130.
Okay, Mr. Powell needs to pay attention to these numbers. These are not.
Yeah, look at that. Advanced decline just dropped almost 1,000 here over just a matter of minutes. And I'm sure we're going to go right to DXY. And we're going to see
the 1-year inflation outlook now is 4.9 versus February's 4.3. They expect inflation to go up. Things are changing a little bit here. But I'm not really seeing a lot of movement here, to be honest with you, considering that these numbers, how bad these numbers are.
Yeah, advanced decline sticking right around that 4,600. Tick has gone back positive here, so it doesn't even look like those numbers. I think sentiment, this is showing you market sentiment might be a little bit better than those rear view mirror reports that we talk about all the time, right, Mr. Flanagan? These reports will always point out are in the rear view mirror, and we're driving a car, we hope, forward.
That's right. Looking out the windshield, which is much larger than the rear view mirror. From my experience, though, I will emphasize one word in that report, and that's the university. So this is a bunch of college kids and, professors.
Like I said, the professors are more, the professors still run, but yeah.
Yeah. But, hey, give me another beer, will you please? By the way.
Yeah. Oh, look at that. I love it. I love it.
I
will say the academics are fighting back too. Did you see this morning Yale president on CNBC really going after the policies of the White House and all this stuff? I didn't give it much.
Yeah, all you got to do is look at any news network, and they're rolling them all out because come on, these guys are stuck in the mud. They've been there for the last 40 years. What have they advocated to change the policy mix to help create, a better world? There is no growth in the world. So what have the academics done? Look, as far as I'm concerned, the academics is the one group you want to put in the rearview mirror and, just put in the back seat. Keep quiet. It's like the kid in the back seat. Are we there yet? Are we there yet? So I'm sorry. I've never paid much attention to the University of Michigan's indicators. I find that they are horribly wrong in typical. But does anybody surprised that this number is weak?
No, it doesn't surprise me at all. And like you said, it's a rear view look. What I want to see is, what is the tick doing now? Tick's positive again. So what are the market participants telling us? That their consumer sentiment is a little bit better than what you are seeing here, right?
That's right. And, as far as the tariffs, it's a one-time shock to the price. That's it. But the Secretary Treasurer was on yesterday and said it the best. we're a deficit nation,
Right.
and putting tariff. The people that need to be worried and need to respond are the surplus nations. They're the ones that end up with the short end of the stick here. And now the threatening to put tariffs on the United States, it's like, go ahead, guys.
Yeah, no, and I'll point out I've heard a couple of analysts, over the last few days say that, all this is the same playbook that Trump used the first time. It's just in the opposite order. He was very pro-business out the gates, did a lot of business groups and things at the beginning of his last, administration. Then he got really tough on tariffs about halfway through. This time he's starting with tariffs. So if you are a longer-term investor, these are the opportunities to get wet your whistle and start to pick up your positions as it will inevitably blow off, the tariff talk. They'll figure out the right answers. And if anything, it could just be better for the U.S. economy in the future, as hopefully our reliance on outside, data from outside, or not data, but, goods from outside get moved onshore. So,
I look at this like a football game, in the first administration, when the quarterback came to the line of scrimmage, everybody was like, am I okay? Is this the right position? Should I be over here? Am I going out for a pass? This time around, and the defense looked at the offense there and went, come on, you kidding me? You guys are going to win a game? This time around, they've come out of the huddle and everybody is set, ready to go. They know exactly what the playbook is. So I would, look at the markets, and clearly you don't step in front of these freight trains and expect them to stop. The markets today, as we've highlighted, electronic trading is instantaneous price adjustment.
Yeah.
Right. So,
absolutely.
And so let's jump into some of the things that have happened. Lo and behold, Bank of Canada cut interest rates. And that was a little bit of a surprise to me. But then again,
they caught you by surprise a little bit there.
They did, because I guess the factor I did not take into account was we have a new prime minister being sworn in today.
Yep.
And, Steve was talking about positives. Let's talk about that. What a great positive this has in the potential to reset the United States-Canada relations. Trudeau is out. Goodbye. And, Mark Carney, this guy is a proven asset. He knows the game. He knows the global game. So I would think that there could be some positives out of this one. So I think that the Bank of Canada kind of juiced it a little bit. Not that they couldn't. Their economy is not really showing that great a sign of growth. So I think with the tariffs in the wind, they just kind of jumped ahead of and jump started the economy here with another cut to 2.75%. So that's a significant positive.
Yeah. And if we look, they're at about $1.43 here. Really didn't do much to the price. It sort of stayed in the same consolidation zone that it's been in.
That's right. I do think dollar CAD is locked right now, 141, 144. Maybe you could see a little bit more on the top side here, but dollar CAD is one of those currencies. Once it makes the explosive moves, it just loves to sit into a grind.
Okay.
So, and I think that, we may see that, as well as the dollar mix. You could easily see the dollar mix rolling into that sort of pattern as well, sitting at 1989 right now. It's showing significant strength from where we've been. I had always talked about the 20.02, but at 9.5% interest rate, and Mexico suddenly, kind of improving relationships with the U.S., that's a great buy to have a high interest rate currency. So we've kind of edged to the low side on the dollar mix. But
would you be looking sort of at this liquidity zone going down closer to 1975? To me, it looks like there's a pretty good liquidity zone in between where we're at now, down to about 1975 or so.
Right.
That you would dip your whistle if you start to believe that if you're looking for a long interest rate play to be in. Like we just talked about, Canada just went down to 2.75, and Mexico still up at 10. could be a good opportunity there. And so far, Trump hasn't threatened to end their auto industry.
Right. So what is the currency market in the MEX and CAD telling us? That the currency markets are saying the threat of tariffs looks to be over. Now, things can happen rapidly on the next tweet or the next headline, but people are buying Canadian dollars, they're buying the Mexican dollar, and that would only happen if people feel that the threat of the tariff war is in the rearview mirror. So that's one of those things in evidence of what I say, money moves first. That's what that would be telling you. Could be another ingredient. But, we've got a few other things. You've got the Chinese market surging on expectations of more. Several of the ministries are planning a conference on Monday to release the measures that they're showing to boost their economy. I don't know. We've had 3 attempts at that?
Yeah, it's funny that I noticed that they were all jumping up today. I was looking at Baba, Baidu, Neo, everything except for Lee, which had actual earnings and had bad earnings, was just jumping to the upside. That always, and I said my spider sense was tingling a little bit there because I feel like deja vu, right? We've heard this so many times that they're ready to do it. Is it going to happen? What we know is that they get so worried about their global views or macro views on China that they talk a good game, but then they come out with the softest bat I've ever seen.
Exactly. And, in the short term, so let me define my short term, I would say maybe 1 to 2 months. I would say, China's probably going to exhibit, after all, the threat of falling into a deflationary spiral. If I hear that word one more time, we've been talking about that for 6 months,
right?
But now all the academics are on the boob tubes.
Well, it was like when the R word was used, a year ago, and no one wanted to use it. And then we just changed the metrics. Well, now it's not 2 quarters of negative GDP. Well, wait a second. That was the first definition I learned in school. Was a recession starts with 2 consecutive quarters of that. So they like to change the guidelines or the playing field a little too quick sometimes for us.
That's right. And that's a trade, like I said, 1 to 2 months. It's probably a hot trade. You want to maybe, if you're going to follow along, there are some interesting stocks ever since these AI releases. A lot of people are hyped up about it, but I would term the China trade short term, because in the
medium, have their head on a swivel there, because it will turn. And what we'll also point out is if you're a cash market trader, it's very hard to trade those stocks because they're going to make their decisions overnight. And that's when they're going to release their news, like Li Auto today, down 7% on the news of their earnings, pre-market. So if you have to wait for that cash market, you've got a problem. We haven't talked about that. Well, that's going to be a great one to do with you and find out your views on the accredited investor and daily trading limits and things like that, because there's so many traders now that have changed the way that they trade. They've gone to cash accounts. Those that are with us that don't know what that means is, if you want to be free and clear of having any daily trading limit set for you on how often you can trade the same stock in a day, you have to select a thing in your brokerage account that says I will trade in cash only. And what that means is, if you have $10,000, once you trade $10,000 for the day, you don't have any more money to spend until the next cash market opens. But I think it would be a good one to have with you, because I'd love to get your views on it.
Well, if you're a short-term trader, then you've got to be watching your cash balance very carefully. And you've got to have a whole different mindset. And that mindset is, first, before you even touch the buttons, how much do you want to make in a day? If you've got $10,000 in your cash account, if you can make $500 in a day, that's a pretty good.
That's huge.
Yeah. So once you establish that,
you just nailed something that is so important. I'm so glad you brought that up. Expectations. We don't talk about that at all on Quasar so far, and that would be another great topic. Like you're saying, is so many people come into the market with $1,000 and they want to earn $100 a day. I've had people come when I was doing my crypto room at Prosper, and we would ask them expectations, because you want to make sure they're going to fit into the program that we had. And I can't tell you the amount of people Oh, I've got a lot to invest. Well, what does that mean? We need to know so we can guide you as to whether this will work for you, the style of program that we have here. Well, I want to invest 1,000, maybe 2. Okay, no problem. In crypto, you can buy $100 at a time, and it all works out pretty well as long as you do it in that. So that fits the guidelines. But how much are you looking to make in a day? Oh, I want to make $100 a day on that. Wait, you want to make 10% a day?
Yeah.
A day. So you understand, if we do that by the year, there's 365, that's 36,500% earnings. And if I could do that for you, I'd be working for Steve Cohen. I wouldn't be working for you.
That's right. Yeah. In many times, as we've had many over my years, junior traders come in, and they start punting it around, and they get a good day and another good day. And suddenly that, making, in my profession, making $25,000 in a day was a good day. Whoa, I made 35,000. And of course, the old guy on the desk would be sitting there going, okay, let's see how this goes. And of course, money muscles come in. And that's the biggest downside risk to trading. It doesn't matter if you're trading $1,000 or $100 million. You make money, and then you deviate, because suddenly, instead of making $500 a day, I think I could make $1,500 a day. And you break out of a winning pattern.
Absolutely.
Once you establish a pattern of trading, stick to it. Expand it, but expand it slowly. If you take a $2 position every day and you're making money, maybe expand it to $2.50, $3. But establish your track record. The second part of that trading that I would relay to any of our viewers here, at the end of every day, when you begin, okay, and when you begin, that lasts for a long time. Review your trades. At the end of the day, going through your trades, what was the decision-making process that made me buy that?
Absolutely. And it can be as simple. This is a great one. And what I love, that it shows how professional traders, no matter what their backgrounds are, think the same way. Agnieszka Wood, who is our trading mindset coach that comes on Monday and Wednesdays at noon and works from a neuroscience background and is now a trader, will tell you the same exact thing. Journaling, looking back at your trades. Dr. Alan Ellman, 30 years of developing the blue collar strategy of investing, which works on covered calls. What does he always tell me? He looks at every single trade. What did I do right? What did I do wrong? What could I have mitigated a loss into a win? Where could I have maximized this and made it even a better trade? What was I thinking at the time? And it sounds like it's a lot, but it isn't. I literally, I take a screenshot of my trade and I put a couple of little notes on the chart. That's it.
We call it in our business, in FX, we call it post-trade analysis.
Yeah.
And that is, you establish a post-trade analysis on your winning and losing trades. And I'll tell you specifically why on losing trades, because in my 43 plus years of trading, I still repeat the same trading mistake. It's just part of my mantra that I do.
Your psyche it's part of it. Yeah, I'm the same way. I there are certain things that I FOMO into in a way that but knowing it can help stop it or lessen its effect. What I've done is that because I started writing it down, I accepted that there was a pattern and there was a deficiency. Listen, we're all alphas if we're traders. Let's face it. We don't, listen, the trader that's not alpha, that's looking for alpha from outside, is the trader that loses. The reason we win is that we are out there scouring for what we think is going to work for us, matching it to our psyche, our trading style, and our allocation, our budget. You can't buy a Mercedes if you can only afford a Honda.
Even some of the traders that you go out there, 8 out of 10 trades I made money. Okay, let's look at the 2 you lost, and how come you're down on the week?
Yeah, exactly. That's it. Is again, when I talk to people like yourself, they'll brag of a 55% win. A 60% win is a huge number in the business because we're working with asymmetrical trades that are set up in our favor, where the risk reward is going to give us a benefit. So by setting up my trade that way, I already know I don't have to go 50-50, right?
That's right.
I'm setting it up that my wins are always going to outpace my losses in the volumetrics of it, right? And that's so important.
So important. And, when you begin to establish your trading psyche, and I refer to this as your intuition, when you can begin to identify what was the intuitive power up here in the brain that got you into that trade, if you stay in doing post-trade analysis, what happens over a period of time, 3 years, and I would even go 8 to 10 years, is you begin to look at things and you can intuitively make a trading decision without any other information. And you will find that if you react on your intuitive power that you've developed over time, you will find your trades, then classify them A trade, B trade. My A trade is, I got to be in this. I got to be in it. And you find, wow, I had that feeling again. I went in, it was an instantaneous score. So these are the things that over time, but Howard, I did want to kind of segue right into my what I wanted to talk about today, and I'll share a screen here on the dollar index. What I wanted to do is to talk about. Let's see if I can make this work today.
Okay. While you're taking a look at that, I will quickly just tell everybody that we have seen the market move a little bit to the upside since we've been talking with Mr. Flanagan here, about 45.87 on the advanced decline. But we are seeing a little bit of a slide on the Qs back down to about a 1% gain, SPY down about to an 84% gain, or 84%, 84 basis points. So we are seeing a little bit of a sell-off here as Mr. Flanagan takes control of the charts here. And Mr. Flanagan, I did it wrong. There it goes.
Okay, if I got it.
You've got it, and you've got the control, sir.
Okay, so when I talk about the dollar index here, so what I want to do is emphasize, and Howard, this was a great segue in talking about trading and rules of trading and intuitive capabilities, is I want to take one note to underscore technical trading. To understand where we are going, it's very important to understand where we have been. And so in doing that, what I look at in the dollar index is presently we're sitting in around 103. Let's see, we are sitting at 103.35, 103.70 right now. And we can see, first thing I look at is my stochastics. Stochastics is a momentum indicator, and they are in such an oversold territory. Highlighting what Steve and Howard were talking about earlier in the show before I came on, a sprinkle of positive news now, when a stochastics is so oversold, is going to have an immediate effect. So looking at the dollar index at 103.70, our low has been 102.80. And 103.30. If we break below this 102.80 level right here, I've highlighted it, that's going to probably create a significant downside move. So when stochastics are like this and I'm looking for the positive sprinkle, I immediately turn to the top side. Where does this price pattern break? 104.10. If we break that, look at this gap in here that we can fill. Now, the interesting part, if I can figure out on my chart here, the interesting part of this chart, nope, I can't do it, is to look back and at the previous 102.80s where we have bottomed and bottomed again. And if I could open this chart up, and this is what I would highly encourage viewers, when you begin to establish a trading pattern, as we are in here, look back. We touch here, we touch here. If I go back in this chart, there are multiple touches of this particular level, 102.80, going all the way back for the last 2 to 3 years. So this is something that is always that I would highly suggest that you would look at. Now, to switch my chart, Howard, I think I've lost the ability to do that. I'll share a screen again and try to do that. Yeah, Howard, I
I'm
think
here with you, buddy. Don't worry about it. What I would say is, what you want to make sure you're hitting present and that you're doing the share screen,
right.
and then pick the actual window. You were sharing a. Now you got it. Now you're in your chart live, I believe.
Okay, so here we are. If I go back in the dollar index, so here I am back in October of 24, in probably March of 24. Let's keep going back. And you could see we're back in February of 24. Look at all the touch points that 102.80 has. And significant. When you broke here in June of 22, look at the sharp move that wasn't touched. When you broke back below it and broke back above, that's the way you use technical analysis in a look back. Look at how the level comes into play. And that's why then I give it a very high weighting to where we are. When I look at the dollar index, of course, I have to jump into the euro dollar, which is over 50%. Again, stochastics, way overboard. And here we are again at a 109.47 high. Look at how it's a double top. In fact, here we got a bottom before it broke down, came back and tested. So here we are coming out of this trading congestion back up to test and failing. How significant is that? Let's look back again. Here we are touching in June. Here we are again at tops. So this is why these things become so important in trading to establish. In the euro dollar, a 108 will break the price pattern and probably retest us into this gapping motion. And just one more that I'll jump into, because what we do have ahead of us is the Bank of Japan. It's been in a nice downtrend since January of this year. However, look at our bottoming pattern yet again. 146.53 has been our low, and look where it comes in again to this bottoming pattern right here before the breakup. So I do think dollar yen at 146.53 has established its low. I am looking for a 149.25 break. However, jumping back in to our let's see if I can get myself back to Howard here. There we are. So jumping back with Howard here, some things I want you to look ahead for. Next week, Fed, Wednesday. They're on hold at 4.25%. I don't know. Looking at the situation in the United States, I'd have to say there's going to be a few people that put their hand up and say, don't you think we could squeeze out another 0.25%, especially staying in line with the ECB who cut, Bank of Canada who cut? How much are you looking to push? Because at some point in time, the dollar becomes a high interest rate currency.
Right.
Then on Wednesday, we have the Bank of Japan. They're expected to hold at 0.5%, although they had very good news with the union, Rengo, the largest union, in securing the highest paid pay deal in 3 decades for the workers. Why is that good? Because that keeps inflation going. Doesn't that sound odd? But we're in Japan fighting deflation for 25 plus years. So when they see wages going up, that's wage inflation, they feel that they have finally put deflation behind them. And then we have Bank of England on Thursday. Bank of England expected to be on hold, but keep in mind, Bank of England voting member, she said that maybe we need to be more aggressive with our interest rate moves. So watch out for a wild card from the Bank of England on Thursday, and then SMB expected to cut on Thursday down to 0.25%. All this has been telling me, if I look at the macro landscape, come on, Fed, wake up. Get with the program here. You are driving us into an iceberg. Please steer the ship around.
You don't want to be on top of the Titanic? I don't either. I don't know how to sing that song.
But that's it for the FX world, Howard. I look forward to joining you Monday with a little bit closer take. But next week, interest rates jump back to the forefront. Inflation figures this week all have been benign. In Europe, they've been stubbornly holding on. But then Europe and the UK, if they're acting on inflation numbers, they don't have the price adjustment process that the United States has, where prices are passed through into the marketplace.
Right.
In their countries, wages have been held down. There's been no growth. So when people have the opportunity to raise prices to gain a little bit more profit, they do it. And that's why they're having a stubborn problem. But get out in front, Fed. You got to look at the world. Rates are coming down. China's fighting deflation. You know, you can't be immune to everything going on in the world.
No, we have to keep our head on a swivel, and we have to watch this stuff because it matters. As you've talked about, you need to have a few different things on your watch list, right? DXY should be up there. You want to be seeing what's going on in those in the money markets because it matters and they move first. Again, thank you so much, Mr. Flanagan. You had a shout out from Kenya today. Here, I don't know if you saw, I put it across the board there. And Mr. Williams wanted to say thank you, like always. And another gentleman said he can't believe this information is for free. So great information from you. We love it, Mr. Flanagan. We will catch you again on Monday. Have a fantastic weekend.
You too. Thank you.
Okay, everybody, I'm about to bring in the man himself, Mark Petrino, chartered market technician, and the man who learned to trade from some of the best in the business at some of the best hedge funds. Comes on Fridays here to gives us a look at some of his charts. We appreciate it so much. Mark, how are you doing today?
Hey, I'm doing good. How are you?
I'm doing well, man. It's a pretty good day here. Markets are moving up. President's tweeting pro-business and pro-market news today. A little bit different than the last couple of days. So what's going on in the markets that has you interested these days?
All right. Well, I would think that we are setting up for some type of a tradable bounce, just like last Friday we talked about, or was it the Friday before? I forget. So let's just look at a couple things here. This is the American Association of Individual Investors sentiment, and sentiment is one of my favorite topics.
I don't think you're sharing the screen yet, Mark. Sorry.
Oh, sorry. Guess that would help. Share screen. All right. Is it?
Here we go.
Okay, cool. So anyway, this stuff is not perfect, but it's very interesting. And you can see here that 3 weeks in a row, the bullish sentiment was below 20%. And the bearish sentiment is around 60%, which you can see a couple of weeks ago, this was the year high. So what this means is that if people are excessively bearish, what do? They sell. And eventually they run out of selling. The market runs out of sellers. That last seller sells the last share. And at that point, the only place the market can go is up. So this is what we call a contrarian indicator. Now, if I look at the markets, if I look at some of these sectors, let's look at our technology sector. I'm just looking at the ETFs here, the spider ETFs that track the sectors. So this is the technology sector ETF. The symbol is XLK. And as you can see, we're kind of trading around support, right? This bottom down here was around 205. It's around 211. So we're basically at support. If we look at the financial sector, we can see that it too is testing support. So the financial sector and the technology sector together are about 45% of the market. So that 45% of the market is right at clear support. If we look at the consumer discretionary sector, you can see the same thing. It's at support, right? And let's look at communication services. Yeah, so you could even you can say that this is at support too. So you got a lot of the market, a lot of these sectors are just sitting there right at support. And a lot of times when something gets to support, it rallies. And that's because support is this price level or zone where there's a large amount of buy interest. Right. And sometimes the people that want to buy start to get the sense that other buyers are lurking in the wings. That's why the stock has gone down. If it's going down, that's why the stock has stopped going down. If the stock is going down and there's not enough buyers to fill all the sell orders, so the sellers are forced to put their shares out at a discount, and that forces it into a downtrend. But when we get to a support level, the tide turns. There's enough buy interest to fill all of the, or to absorb all of the sell orders, and that's why we stop going down. Right. Now, sometimes some of these buyers start to get worried they're going to miss out because they know the sellers are going to go to whoever is willing to pay the highest price. So they increase the price they're willing to pay. Other people see it and say, like, oh, that guy's willing to pay 95.5. I'm going to go to 95.60. Someone else sees that and they're like, I'm going to go to 95.70. And you get a snowball effect that forces the price higher. So this is why a lot of times when you get to support, you reverse and you rally. It's due to anxious buyers. And the reason why there's support here and here, and well, support here, people sold at this bottom and they're like, oh, I made a mistake when the price rips higher. And they say, if it ever gets back to my price and I could buy my shares back at the same price I sold them at, I'm going to. So when we get back down to support, these remorseful sellers enter the market as buyers. And if there's enough of them, it'll form support at the level that was support before. So this ties right into what we always talk about. It's really important is the psychology. Support forms because of seller's remorse.
Yep.
Markets trend because buyers and sellers are trying to outdo each other. Buyers are outbidding each other. Sellers are undercutting each other. That's why we go down. So yeah, so the market's had a really
that you know what you're saying is perfect because you're explaining it in a way that a lot of people don't understand when we talk about the battle between the bears and the bulls at certain locations and certain levels, right? Is the sellers and the buyers. The people who were selling, they start to disappear because they've already sold. They have no more shares. I've never heard that exact term used before. That's why I wanted to stress it. Is it to that perfect analogy is that there isn't any more shares to be sold at that price. And it turns that needle. And now if I want to buy it, I have to offer more than the current price is at.
Exactly. And that starts a bidding war.
Yeah.
And I mean, if we just think about the psychology of some of this stuff here, like let's look at let's look at Tesla. I think it's really fascinating, and I think it's unappreciated. People take it for granted, and I think that's because a lot of technical analysts don't really know what they're doing, frankly. They'll look at these patterns and they'll try to identify a pattern on a chart, but they don't understand the price action that makes the pattern form.
Absolutely.
And
it's
that's
price
really
action always wins. It's something that BigBeat's been railing about this week, people clutching like pearls to their charts. And while technical levels, price action doesn't lie. You can't be watching everything. The same chart indicated if you were using the same things today that you were using 2 months ago, they're not going to react the same way incorrectly because the market has changed the dynamics, right?
Exactly. Like, for example, here's something to think about. When a market is trending higher, we're going to get more overbought signals than when it's trending lower. And then when it's trending lower, we're going to get more oversold. So one of the things you may want to do is if we look at our RSI indicator, all these indicators come with these default settings. So the overbought signal on the top is this threshold of 70. But maybe in a market that's trending higher, something isn't overbought at 70 because the general market is going higher. Maybe it needs to get to 75, in which case you can change the default here to 75. I'm just looking at the stock here. So let me just go take a look at this. So let's just make the 75 just for the heck of it. But I think it's important to understand that these indicators have default settings. And sometimes the default settings are going to give you, sometimes the default settings work well, but sometimes you're better off if you kind of finagle
absolutely you adjust them to you got to play the hand in front of you. Like you just said, if the market's moving up, everything's going to seem overbought unless you extend what that level in your mind is of what overbought means. Like in the bull runs of Bitcoin, I don't look at even 80. I'm looking at 90 and above because of the way Bitcoin reacts. It's a FOMO trade. Momentum carries. So, extending or expanding or adjusting what you're given as a starting point is just that. That's a starting point that someone set up for you. You want to adjust it to the market or your style of trading.
Yeah, especially if you are only trading in a limited number of stocks, it would just really be a good idea to just finagle this stuff. Because, like I said, sometimes the default settings work well. Like
Yep.
this RSI is the default setting for the period is 14, so it's measuring from where we are now to where we were 14 time periods ago. Now, if you have a situation like this, right, it might be oversold here. We got oversold and then we bounced. But you look at this and you say, hey, how is that oversold? The RSI is right in the middle of the zone. Wouldn't that be neutral? Well, it's measuring from time period A to time period B. If you count back 14 periods from here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, it's measuring here to here. It's not taking into account this move higher. So it's not that there's anything wrong with the indicator. It's just that you need to understand the nuances, because this stuff obviously is not perfect. If it
Right.
wasn't,
And we also see, even within RSI, I find that there's a lot of easy support and resistance levels that come out that are in between, within the zones. And you can see it playing out right there in your chart right there.
Yeah. And now if you look at all these indicators, right, the vast majority of these things are just different ways of measuring the same thing, which is
Absolutely.
Is it overbought or oversold? You got your stochastic, you got whatever. So some of the stuff I don't even know what it is, but there's different ways of measuring the same thing. A lot of times newer traders, they'll have like 7 or 8 indicators on their chart. And to me, that's just overkill. You're better off, I think, just taking a couple and getting really comfortable with them and really familiar with them. I mean, some people use MACD, some people use stochastics. I basically rely on Bollinger Bands and RSI. I mean, when I was back in my institutional trading days, that's it. This is what my chart looked like. I'd have the Bollinger Bands and I'd have the RSI. Nothing that sophisticated. Nothing
Right.
that like people need to kind of dumb down their thinking on trading. I think
Say,
a lot of people
declutter your charts works a lot better, in my personal opinion too. And what I do is I usually have, as you know, I keep 3 up in 3 different time frames, and they have different indicators, but there's only like one on each one. You know what I mean? As I use VWAP indicator on a 1 minute to try to find some momentum. On an hourly chart, I like to look at a linear regression as my main chart, and then on my daily chart, a couple of MAs. And that's what I look at. It's not much. And like I said, I keep them, overall, I might use 7 or 8 indicators, but that's because I'm looking at different time frames, and I find I'm looking for different things out of them. Am I looking for a turn in momentum? Am I looking for that overbought to be oversold to be overbought? Am I following a momentum trend? There are different ways to trade.
And I think another fascinating thing, which is people don't really consider, is I call it the fractal nature of charting. And I think I should maybe
You'd have to explain that one a little bit more for our viewers, I think.
What's that?
I think you'd have to explain that a little bit more for our viewers, what you mean there.
Yeah, all right. Well, I call it the fractal nature of charting. And that means when you look at a chart, like if we're looking at a day chart, we're looking at the psychology of day traders. So I mean like a 1-day chart, just from like 9 to 9:30 to now. If we look at a chart like this that goes back a few months, this is the psychology of the swing traders. If we look at a 5-year chart, we're going to be looking at the psychology of the buy and hold investors. Now, the amazing thing to me is that you can see the same patterns on these charts of different time frames. So, for instance, here's the 5-year chart, and what do we see? Clear support, right? So, just like we talked about with the seller's remorse. So it's clear support. So this is May of 21, and this is May of 23. So this is 2 years. And you can see the same things happen, right? We get to support and we rally.
And keep in mind that stock went up 100% from that level at one point in 2022.
But I'm sorry, say that again.
What I'm saying is it doesn't even matter. What people don't understand is these levels hold forever, basically. And when you see it went all the way up to 27, it doubled in price. It went up 100%. But those important level was still the level you've just indicated. It still matters. People will think, well, now that Bitcoin's back trading at 80, when it was trading at 80 last time, it doesn't matter because we hadn't made it to 110. No, it does matter exactly. Price action. Look to the left and see what it's done, is what a few of our educators talk all the time, right? Just zoom out and look to the left.
Exactly. And that's what we call market memory. And sometimes the price level that's important can stay important for literally years.
Yeah, you see it right there in your chart. That chart's a perfect example of it.
Yeah. So this peak here was August of 22. This is July of 23. And this is July of 24. So a year apart, it found resistance at the same price level.
Sorry about that.
So now if we look at the 1 year chart or a shorter term chart, what do we see? The same thing happens. Support stays intact. So we were just looking at the psychology of your long-term buy and hold investor. Now we're looking at the psychology of what you would call maybe a swing trader, someone who trades for a few months. Now, if we go to a much shorter term, this is the 5-day chart, you could see the same things happening here, right? Support at the level that was support before, here and here. Resistance at the level that was resistance before. So now we're looking at the psychology of the short-term traders. Here we're looking at the psychology of your swing traders. Here we're looking at the psychology of your long-term buy and hold investors. And you can see the same patterns in different time frames. And that's why I call it the fractal nature of charting, because you're looking at all you're doing is looking at the psychology of traders and investors who have different time frames.
Yeah, without a doubt, and again, that price action, it has a long memory. In fact, the memory is forever, basically. And when you revisit those areas, that's what you see come out without a doubt. CVS, that's always a good one to look at for something like that.
Yeah, this is a really good example of market memory here. I mean, okay, so here's CVS, right? And we get to this peak in August of 15. Fast forward, we get to the same level in February of 22, and there's resistance there. So that's 7 years later. You can see here, this is December of 16 through December of 18. So that's 2 years that level was resistance. So this is a very
coming up here for you, Mark, from Ron. How far to the left is a starting point, and from there, what time frames is your progression?
Well, I think it's kind of the analogy is like the Russian doll type of a thing.
You just keep on taking a layer off?
Yeah, because say you're a short-term trader, say you're a day trader, and like say we're trading CVS right back here, and you're a day trader. Well, if you knew that this was a resistance level before, then you could use that to your day trader as a day trader. And if we get up to the resistance, look for a reversal. So what you're doing is you're looking at a long-term dynamic, but you're trading in a short-term time frame. Because if there's no news, the only thing that's going to make something move is some kind of a technical thing. So even though you're a day trader, you should know that this is getting close to a level that was resistance years ago, because there's a good chance there's going to be resistance there again. Like down here, say you were a day trader on December 2nd of 21. Well, you're thinking, what should I do here? Oh, wait, that level back there was resistance at $90 back in May of 21. So if it gets to 90 today, there's a good chance it starts to reverse. So knowing where the longer term level is going to help you with your short term trading. So I think that you got to, you start off with the long term chart, and then you just kind of work your way down to your time frame. Let's see if we could see like maybe a practical example of this. All right, so right here, so it's clear that CVS has resistance around 66.50. If we look back here, this was resistance in October, and it's become resistance again. Now, if I was a day trader today watching this, I might not do anything, but I know that up around here, we're going to call this 67.15. I know around 67.15 there's resistance. So what I'm going to do is put this on my radar screen, and let's just say it gets to 67.20, 67.25. Well, then we could be on the verge of a breakout. So as a day trader, you could trade the breakout on something that's breaking through resistance, which has been intact for a long period of time. And see, look at that, support becomes resistance.
Exactly. And what I love is, or what you're also talking about, is setting up asymmetrical trades that help us win, in a bigger way when we do have those wins. We just had Stephen Flanagan on, and he talked about so many traders, they'll have a few wins, and then all of a sudden they go in, at the wrong time or in the wrong size and burn themselves out. What we're trying to do is teach you here when to fish. So like in this chart, you can play it either way. If you're bearish on CVS and you say, man, it can't break this resistance, Well, then when it gets rejected at that 67.59, if you see it come below, it looks like about that 65 level, it's most likely going to break to the downside. So you've got an asymmetrical trade where you can set up where you would exit the trade if you are incorrect and where you would start to take profits, right?
Yeah. And I think one of the problems that newer traders have is the media, frankly, because they try to make every single little move in the market based on some kind of a big fundamental story or whatever. Yeah. And as someone who's in the trading world institutionally for 15 years, I can tell you, traders do not sit around and watch TV.
The news.
I mean, I might put the golf on the History Channel on my trading desk, but we had a ban on CNBC. We weren't allowed to put it on.
Makes sense because listen, your liquidity exit for those people as it is when someone comes on and some supposed analyst onto CNBC and they give you their spiel, they're already locked into their position and you are going to be the exit liquidity for them.
Yeah. And the vast majority of the time something's moving, it's just moving due to psychology. It's not like, let's look at this here, right? We know that one of the reasons why we get resistance is because we have remorseful buyers. People buy and then the price goes lower. Like say they buy something at 10 and it goes to 8 and they say, if it gets back to 10, I'm going to sell. So buyer's remorse can create resistance. Now, if we look at a level like this here, look how quickly we fell through these price levels. It's not technically a gap. Well, I guess there is a little gap in there. But when you rip through levels really quickly like this, you just don't have enough time for there to be this large vested interest of buyers who are going to be trying to sell on the way back up. So when the price reverses, the buyers have a hard time finding sellers and they're forced to pay premiums. Now, if you were looking at the news on this particular day, or this particular day, they might say, oh, CVS is trading up on this, CVS is trading up on that. Well, from a trading point of view, the reason why we're making this big move, this gap, is because we're reversing and getting back to price levels where we didn't spend too much time. So I don't know what the news was, but say that instead of doing this, CVS did that. Well, then instead of doing this, it's probably going to reverse like that.
Yeah.
So if you make
the velocity you come in at is the velocity you're going to leave,
and then consolidate and reverse and go back to those same price levels in the opposite direction, there's a good chance it's going to make another quick move back through it because there's just not as much interest. People, if it rips through these levels really quickly, there's not as much interest as if it's something like here where it stays at the same price for a month or so. So if CVS gets back down, reverses back down to here, could be kind of the same exact thing. You make a fast move through this gap and make a fast move through these gaps and then find support down around here.
Yep, absolutely.
And you could see it on any chart, right? Your fast move up, your fast move down, fast move up, fast move down.
Yeah,
the
same sort of momentum eventually reverses. It's when is that top, when is that bottom? That's the the holy grail of questions, but the velocity that they work at, usually it mimics each other.
Yeah, exactly. Like here's Apple, and you can see it.
Yeah.
Where is Apple here? Yeah, this looks, I know I talked about we're being at support and stuff, but I don't know, Apple's been pretty darn weak.
Yeah, to me, Apple is one that I want to see it hit that 200. I'd be patient personally. You know what I mean? As I think there's a good chance we could visit that. And I don't want to take the chance. You know what I mean? As I'm not going to try to catch that knife. I'm personally not getting in until it's back above 220. I'll give up that $10 because I don't want to go down, because if it 200 doesn't hold, where does it stop?
Yeah, right. If that doesn't hold, then it's like,
yeah, because then it goes into the free fall area. Yeah, and all you got to do is watch Tesla to see it, right? It did exactly that, and we know the outside forces that are at play there, but it's still, chart's a chart, and whether it be here, how many times would you have maybe thought like a 357 that was a reversal and now it was going to turn back around, right? That 320 to 350 area. And now you're at 243. And I saw today, I forget the analyst is called for 130 on Tesla.
Really? Okay.
Oh yeah, I want to say it's either Wells Fargo. I remember the headline. I'll pull it up here. I had it in our banners earlier. Yeah, Tesla has, there it is. Wells Fargo cut the price target to 130.
Underway. Now that's kind of, this is something we should comment on, that these firms, there tends not to be a lot of sell recommendations or something like this. They're underweight and whatever the price is 130. This is kind of rare. And I think that for every one sell recommendation, there's like 20 buy recommendations.
Usually, yeah.
And the reason why that happens is because these brokers make more money off investment banking than they do off of trading. So let's just say you're the CFO of Tesla and you want to do a bond offering. And it's like, Wells Fargo has this underweight $130 price target. Screw those guys. I'm not going to give my business to them. I'm going to go to someone else.
Absolutely.
Right?
Yeah, no, you absolutely nailed it. Is exactly there's always, and the analysts get in bed, so to speak, with a lot of these companies too, right? They become very vested in it. You're an analyst for one, maybe two, maybe three companies or a sector within there. And what you tend to find is the people they pick to do those jobs are people that are already in love with it, like myself with Bitcoin or crypto. And they'll say, hey, be an analyst on crypto stocks. Well, guess what? I'm a crypto bull. I think they're going to go up. I'm going to predict them going up. I have a bias.
Yeah, there was a there was a chart that used to go around of Enron. I mean, Enron back in those days, the late 90s, was like, Tesla and Nvidia combined. And I don't want to make light of it because a lot of people really lost their savings and so forth and so on. But as the stock declined, it's like you just see all this stuff like, Goldman reiterates buy, Citigroup reiterates buy, Smith Barney reiterates.
Yeah, Kramer did it
from
like within hours before the final shutdown.
Yeah, it goes, and then they finally got bearish on the stock after it lost about 90%.
Yeah. Oh, yeah. Well, it's taken till today for someone to finally talk negative about Tesla.
Did you ever read that book, The Smartest Guys in the Room? That's all about Enron.
Yeah.
It's pretty interesting. Like, they would put all the secretaries out on the trading floor to make them look busy when they had customers or visitors come by and so forth.
Yeah. CNBC tried to call out someone at Goldman Sachs for that today because they're like, those guys aren't traders for you. And they're like, yeah, they are. Joe was calling them all out. It was kind of funny.
Yeah.
That's an old trick, right? You make it look like there's more. Everybody's in front of a terminal yelling, buy, sell. We have 1,000 shares, 100,000 shares. Yep, you got it. You're booked. Meanwhile, there's no one on the other side of the phone.
Yeah, that's pretty funny. Let's look at some of these not so magnificent sevens, I guess. Yeah, so here's our Facebook, and I guess we can get rid of that. And like you can just see right here, just like we saw in those other charts, you get support at a former support level. You get resistance at a former resistance level. Resistance can become support. Now, the reason why we see the same patterns on charts of different things is because we're looking at the psychology of the people that are doing the trading. And whether you're trading Tesla or whether you're a gold trader or whether you're a crypto trader, people experience the same emotions.
Absolutely.
So you wouldn't know what this is. It's not like a stock chart looks any different than a commodities chart. This is gold, by the way.
Yep.
Trading broke 3,000 today.
Yeah. Seeing analysts for the first time, most of the analysts, as it was cutting towards that 3,000, were calling for a sell-off. But now seeing analysts go the other way, we had our guy Peter Thomas on, and he made it clear that sovereign wealth funds and central banks are still moving into gold right now at alarming rates.
I saw this show. I find this hard to believe, but I think it was like Unbelievable with Dan Aykroyd. And they said that all the gold in the history of mankind that's ever been mined would be about the size of a tennis court and then maybe 30 feet high. So that's like the size of like a small house. So,
really?
it would seem to me like there would be a lot more.
Yeah, I feel like there would be a lot more too. I'll have to do some research. I'm going to put a note down. We'll follow up next Friday on that one. I'm looking up how much would all the gold be. That's a great one for ChatGPT and some of these others.
One thing to think about is, say you want to buy gold and you're going to go long gold. Well, is there a better way to get exposure, right? If you're right and gold does go up, is there a better way to play it? And you can look at, if we look at gold here, since the beginning of the year, it's up, roughly 15%. If we look at is this it? If we look at AEM, which is a gold mining stock,
Mining. Yeah.
over the same time frame, the stock is up about 30%, about twice as much.
Yep.
So part of trading is understanding how to allocate your capital. Like, where do you get the best bang for your buck, so to speak?
Right.
So,
Channel checks, right? We call it sometimes here is you want to do a channel check. If they say, if your thesis is gold's going up, what are going to be the biggest plays on that where it's magnified? And I mean, I remember Peter Lynch even talking about that back in the day of the Magellan Fund is, his biggest plays versus whether they matter. You got to look if you think that ConAgra has the greatest new ice cream, it doesn't matter because they have their portfolio so big that ice cream doesn't move the needle. But if it's NVIDIA and they come up with a new chipset and they only have 4 chipsets, that's a much bigger deal to their company.
yeah, exactly. So that's something to think about there.
Yeah, absolutely. It's a great, because it does matter. So many people only look that way, start to think out in a bigger way as to how will that play out. Steve talks about that sometimes in healthcare where the play might not be the company who creates the drug, but who's going to market it, who's going to take it to market, what does a CVS win in it, does, those type of things.
Yeah, I remember when I worked at Gabelli, him saying that one of like the best investments he ever made, I forget what it was, but it was when Easy Pass started to come out, and they did their analysis or whatever, and they found a company that made the certain parts or whatever for Easy Pass, and it ended up being a huge score. So it's kind of like thinking outside the box. It's
absolutely.
like,
everybody's looking at data centers and saying, okay, I need NVIDIA for the chips. I need Oracle for the software. I need Seagate for the hard drive. People aren't looking at what's the HVAC that you need because Carrier supplies like 80% of data centers in the U.S. with those huge HVACs. So maybe Carrier is the play.
Yeah. This just kind of came to mind. Mario told me once that, he got really big with cable and so forth back in the 80s. Yep. And he did a presentation where he was talking about the future of cell phones, and he had a cell phone back then which was like the size of a shoebox. This is like the early 80s, or maybe the late 70s even. And he said by the end of the lecture, like everyone had left. People were like, "What are you, crazy? Cell phone?"
Yeah. Oh yeah. I mean, there's so many stories of people, that they just said, "Nope, that's the next tulip." And oh yeah, you're wrong. I mean, just look at how we use our phone. Could you imagine if I told you in 1980 that every song that was ever written would be on your phone and you could access for free?
Yeah, it's I don't know, man. I'm mixed on these phones. It's just it's just so like, everyone talks about like with the kids, right? Is, the depression and the bullying, but think about the physiological things, like what's they're doing to their eyes.
Your head's always down like this.
Your repetitive, stress syndrome, or what are going to be the ramifications of this stuff in years. So I don't know. Maybe there's a company that like, will benefit by fixing people's repetitive stress syndrome or whatever.
There you go.
But anyway, I don't know. I don't want to make light of it. But look at this oil chart, right? Back down, right around 66, 60s is this level. And I mean, this level has been support going back to March of 23. So for 2 years, every time oil got down to 66.60, it found support and rallied. So this is market memory. And again, it's the same thing that we saw before. There's support at former support levels because of our seller's remorse. Things rally off of support because of buyers outbidding each other and causing a snowball effect. So we're back to this support here. And I mean, this is going to make a move inevitably over the next week or two, a tradable move. I don't know. I mean, I would say it's probably going to go back up. But if it breaks down,
I believe that to be the case. I mean, it's tough. That's a tough one to go left on because we know during COVID it went negative. So there's some false sort of price action there. But you've nailed it. This is where it stops being profitable and they turn off the pumps when it gets below a certain level. So
there are certain countries that the oil needs to be at a particular price level for their economy to
it doesn't make sense. Yeah, if you're Exxon and you can only get X amount for the oil and it costs you X amount to do it and refine it, you don't pump it. You just say, I'll put a cap on it for today and we'll pump again when prices move up in our favor. So that's why support and resistance in oil is one of those ones that I think is so important.
Yeah, and you could trade, if you don't trade oil, there's other ways you can look at it. There's the USO, which is a ETF that tracks
Yeah,
oil.
USO absolutely is a good way to do it.
With these ETFs, it's really kind of amazing. When I first came up, they didn't have ETFs, and
Yeah, no.
now it's like your average retail trader can get exposure to all kinds of commodities. You can get exposure to the short side with the inverse ETFs.
Yeah, absolutely. And a lot of times, ETFs are great to use for beginning investors who maybe don't have, want to diversify but don't have a ton of money. You can buy a couple of spiders and you've diversified your portfolio, and then you can focus on your day trading within one or two individual stocks.
Yeah, like this is the corn ETF. And again, right, support becomes resistance, resistance becomes support. So, you can wait to see which way this thing breaks, and you can tell your friends you're a commodities trader.
Yep, absolutely. I love it.
There's wheat too, WEAT, which tracks the price of wheat. See the support. I mean, to me, this looks like it's in an uptrend. I'm not giving a buy recommendation.
That looks like it is. It's broken to where you would already want to be. You'd want to be in that trade now to the upside. So
yeah, and there's a soy, SOYB.
Yeah.
Yeah, we can see that's sitting on a particular level of importance. Sometimes the level can be broken, but it could become important again, and we can see that here with this $21 level. With support back here and then support here, and broke down, came back, but then support here and support here. And there's the natural gas ETFs. Let's bring up natural gas. Now, if you think natural gas here is going to break out of this ascending triangle pattern, you could buy an ETF that's called BOIL, BOIL, which is designed to move in the same direction as natural gas, but by about twice as much. So if natural gas is up 5%, this will be up about 10%. If you think it's going to reverse and break down, you could buy the cold ETF, which is designed to move inversely to natural gas by about twice as much. So there's a whole...
there's great tools out there for sure.
Yeah, there really is. You can get leverage. If you think the market's going to go down, you can just buy an inverse ETF. For example, this ProShares short S&P 500. It's just designed to move in the opposite direction as the S&P does. And it's got plenty of volume. It's traded 6 million shares a day. And even if you say you think the market's going to go down, but you don't want to sell, maybe it's because of tax implications or for whatever reason, you can buy something like this just to hedge your portfolio. So, if your portfolio
you should be
down,
doing things like that. We talk about it all the time, unfortunately, that, again, the retail traders don't understand that they're these simple tools to use, whether it be VIX, whether it be the inverse of the Qs, the inverse of the SPY, the inverse of even individual stocks like NVIDIA, Tesla, all have 1 or 2x to the up or downside.
Yeah, so there's a lot of tools out there, and a lot of times your retail traders they're not even aware of them. You can get by leveraged. Let's see. You can buy leveraged. I forget the symbol off the top of my head, but there's an ETF that's designed to move in 3 times the opposite direction of the S&P. So you could, traders shouldn't fear down markets. Like, we don't want a down market, but markets go down faster than they go up. So a lot of times it's easier to make money in a down market than in an up market. So we shouldn't fear down markets, because there's a lot of ways you can make money on them, but you can't make money if you don't know about these ideas.
Right. And you've got to understand it. It can't always be a buy the dip mentality, because sometimes you're trying to pick up a nickel in front of a steamroller. Momentum does move, and until it starts to, in other words, you or I as a retail trader don't have the ability to move the tide. We're going to need the institutions to make a decision that today's the day that they want to dip their toes into the water for that, water to rise up for everybody.
Yeah, exactly. All right. So what else should we look at before I get going?
I think you nailed all of the ones that I wanted to talk about. I'm just looking here at my list of stuff. Yeah, you hit them all.
Here's our Bitcoin, and we see the same thing, right? Resistance. Yep. So Bitcoin looks kind of neutral, but my guess is that it trends lower and gets down to about the 73,000 level.
It is looking similar to what it's, the consolidation slight move up is looking similar to what we saw at the beginning of March. So I don't argue with that point here. And I mean, there isn't much news that's going to change it. You've seen it all. I mean,
Yeah.
today Ripple got, or yesterday they announced the U.S. government, the SEC actually put on its website that XRP is a strategic instrument of money movement for the U.S. government now strategically, and it's still set at 230. It didn't move the needle. It's the old sell the news type of thing. There isn't enough news. What's going to happen is it's going to take, again, sovereign funds, pensions, those guys to start buying Bitcoin again for it to move up.
Well, I'm comfortable enough with myself to admit that I don't understand cryptocurrencies.
Yeah, and it's very different. Trading. I will point out again for everybody, crypto is different than Bitcoin. While it is a coin, it is the lead crypto. It has a different lifespan, lifestyle, the way that it was created, how it was created, and the tokenomics of it differ from everything else that's come after it. So there's two different components there. We could definitely talk to you a little bit more about that at any point you want, Mark. But it's, it definitely, I think a lot of people don't understand it. And the key part that I tell everybody is it is the first thing that gets sold in bad times. Is whenever you need more money, the first thing people look at their portfolio and sell is always their crypto and Bitcoin.
Yeah.
And that's what you have to still worry about. Mark, thank you so much for joining us. I don't want to monopolize your time here. Oh, we do have a comment. Let's see if someone's asking for one.
Yeah, I'm off to pick my daughter up at college. She's coming home for
school. Oh, well, that's great. I got to pick mine up at kindergarten. So both a little bit of a different age gap there, but we both have the same thing to do. Everybody, thank you for joining us.
Actually, I just wanted to mention to Arwell, I like this Direxon. I don't know how you spell it, but Direxon.
Yep, I'm familiar with them. They have the ETFs that are leveraged to both sides. They do a bunch with Bitcoin also. It's DIREXION, I believe.
Yeah, so if we look at this, they have a lot of leverage.
Yeah, and our boy Matthew Tuttle Capital focuses on that. They've got them for MSTR, NDX. And others, NVDA or NVIDIA is their NDX or NDVU. They've got a bunch of them.
And now their site's not loading. Well, anyway, this would be a good site to look at. Oh, here we go. So they have, let's see if we could find their list of, yeah, so you got your leverage and inverse ETFs. And I mean, it's pretty self-explanatory. And you got non-leveraged ETFs. But this is a, I like this company because, oh, here we go. Yeah, this is what I'm looking for here. So,
yeah,
you got Palantir, you got,
like I said, they give you access to all of them. MVDU is a great one. Yep.
You got, China Bull, China Bear, you got your commodities. This is your JNUG and your JDUS. So JNUG is bullish. If gold goes up, or the gold miners index goes up, it'll go up by about twice as much. And the JDST will go in the opposite direction. It's inverse. Yep. So just something to look at there. All right. Thanks a lot, everybody. Appreciate it.
Thank you so much, Mark. We will see you again next week. Like always, appreciate all of the insights you bring to us every week. Everybody, we got a busy day in front of us. In 15 minutes, Rebel podcast goes on. Matthew Tuttle, Jeremy Vreeland, the folks at Tuttle Capital. Make sure you're watching that. As soon as that is over, we've got BigBeat with Michael Litt, his interview from yesterday. Then we're going to follow up with Stephen Flanagan, had an interview yesterday that we have here to play. So a lot of great things today, everybody. We'll see you soon.